Ladies and gentlemen, welcome to the Midday Market Monitor. In today's live stream, the one company I can't stop monitoring is Shopify. So we ended up going live, and maybe I took my victory lap a little early, okay? The company ended up climbing back from essentially, if we go back even 3 months ago, company was at $172 per share, and then sort of the Anthropic news, the Opus or Claude Opus 4.5, 4.6, bringing this stock down to $108.78, or essentially $109. Then after earnings, we started seeing some upgrades from Wall Street that climbed this company back to about $128 per share. And then after earnings today, the stock popped another 13% at its high, up to 145.16. A good recovery back to where we were not too long ago. Obviously, it's still not 172, so it's not like we're celebrating new all-time highs of or 182. That's been a little while ago, but a recent high of 172. And then this all got erased once the market actually opened. It felt a lot like SoFi, right? Amazing triple beat. They were up 13% in the pre-markets. Market actually opens now down 12% or 11.6%, maybe a slight recovery, but it essentially went back down almost to its 52-week, well, not 52-week low, but this recent Claude Opus low of $109 per share. Crazy. So what's interesting is that whenever companies fall on earnings, or at least the companies that I sort of focus on, which is like growth businesses, is that this company gets dually cheap whenever it sells off. One, the stock went down 11%. So it didn't go down in terms of like it went up 13, but then it went down 13% afterwards. That's not a 13% swing. That's like a 26% swing from peak to trough. Okay. So two things happen during that moment. One, we show off new earnings. So then price to earnings and price to sales adjust to the new last trailing 12-month earnings of, higher than expected revenue, beats on EPS, more net income expected, way higher free cash flow than expected, good margins on that, 19.5% free cash flow margin. So that alone, if the company were to stay flat, would have made it cheaper because of the new growth on the company, now exceeding 30+% and expected to do that because, Q1 guidance even showed up better than expected, also aiming for 30+% growth. So this growth is looking to be sustained, even though Q1 is a little bit worse off. We're not expecting the same level of growth as a holiday season, but still growing from Q1 of 2025 to Q1 of 2026. Still 30% is higher than what we saw last year, which had growth of about 26%. So accelerating growth rates, accelerating margins, a huge focus on future products like Agentic Commerce, which I swear I listened to the entire earnings call this morning. There was one question that didn't have to do with Agentic Commerce. Every other question was about Agentic Commerce. Okay. So incredible swings. This company is still expensive, which is, of course, the bearish people, the people that, yearn to prove everyone wrong, point to the forward PEs and everything like this, showing that the company is still expensive. Okay, which it absolutely is. But this is what happens to every one business. Shopify has competitors the way Nvidia has competitors. They don't. And probably even more so. So I sort of put this in the company in the bucket of like a CrowdStrike, a Cloudflare, a Shopify, a Tesla, an Nvidia. These companies are always going to have large premiums on them. A Palantir, for example, they're expensive. It's just a matter of like, okay, relatively to how expensive have they been? Maybe that's how much we can pay for this. A company that takes market share each and every quarter, and customers just simply are not churning off of the platform. Now, the concern is that, hey, you know what? They might not be churning off the platform today, but if, the average business that's running Gymshark or Skims or something like this, that's, has large business with Shopify today, if their IT departments can then vibe code their way to replace Shopify, maybe that ends up taking them down. What are you guys saying? Bean? What did I say? What are you guys getting on me for? What did I mispronounce? He pulled an emit. Oh, no. Oh, no. Let me know. Okay. Regardless. How they've been. How they've been? How do you even say it? That's how I say it. It's how they've been. Okay, for real, I pronounce those words the same. I don't even know. I don't even understand. Bean turns into bean. It's the same thing. Did you read it or have you read it? It's spelled the same. Like, it's, how have you been? Oh, been. Okay. Okay. Yeah. Sorry. It depends on how have you been is definitely how you've been, but also how they've been. How have you been? Okay. My bad. It's not a Canadian thing. I think it's just a me thing. All right. My bad. Okay, will you forgive me? I'm trying to be serious. Okay? So, essentially, you know what I also just was reading about? Okay, let's go ahead and stock market news. Evan from Stock Market News ended up posting something great. Wow, he's at 700,000 followers. Evan, congratulations, brother. Holy freaking crap. You're too big for the rest of us. Okay. Google is adding a way for people to buy things while seeking artificial intelligence-powered answers on search and in its Gemini chatbot. Google has been testing new ad formats on Google Search's AI mode that will allow retailers and other advertisers to offer products there. Users can now also buy items from places like Etsy and Wayfair within Gemini. Very, very cool for Gemini, especially if they can get an increased take rate and potentially a new advertising format that can lead to direct conversion. Then they can charge on that direct conversion. I think that that's super interesting for Google, and then that could potentially lead to new higher highs on that company, which people are looking at as being sort of AI proof. Okay, well, the reason why I just quickly changed from talking about Shopify to Google, and I'm trying to bring up their freaking investor. Oh my God, that's going to drive me nuts. I hate they change their presentation each and every time, so they don't upload a new presentation for every quarter. They just update the same one to each quarter every time. Let's go ahead and read about what they had. Shopify had to talk about on their most recent earnings call that was this morning. Universal Commerce Protocol, or UCP, an open standard for integrating commerce with agents so that merchants can keep their brand and attribution. Buyers get trustworthy experiences and agentic commerce can scale. Developed by Shopify and Google. Supported by, wait a second, Wayfair, Etsy, Walmart, Target. So these companies, the ones that we just saw Bloomberg report on Google saying, hey, they're going to be bringing, a new commerce component into, Google AI mode and into Gemini. This can't be the exact same one that Shopify is talking about here, can they? Wait a second. Google AI mode in Gemini, ChatGPT instant transfer, Microsoft Copilot. Oh, wait, holy crap. Maybe it can. Maybe, and it's not just Google. Maybe it's all of them. Maybe that they're getting and bringing commerce to increase the take rate for Google. And that's why people are excited about Google, is because they're actually going to get more entrenched into your daily life and into ChatGPT and into Microsoft Copilot and into every single agentic workflow. So if you do talk about a product that's offered by Shopify, you have a way to purchase that product through the Shopify checkout directly on those websites. I'm telling you guys, Shopify has always been one step ahead. Okay. Everywhere where there's commerce that can be found, Shopify will be found. That's B2B, that's in person, that's from online to on a Meta platform, through social media, through pop-ups, through any form of marketplace. Shopify's there. Okay, and if I just throw down the new one, obviously, agentic commerce, and as you can see, they're going to create more and more and more over time. There's no vibe coding these relationships, right? It's why, Shopify has done so well, is because they're treating their customers extremely well, and that's going to, eventually lead to more sales. Where's Dookie Pie? Tanner looks stressed. What happened to him? Dookie, why are you not a mod? I thought you were a mod on this chat. Good to see you. And is that the real Dookie Pie? I thought Dookie Pie was modded. Tanner, what do you think of Amit's haircut? I think any change in someone's look is always jarring whenever you know those people to have a certain thing. Like if I got rid of the glasses or the mustache, I think that would be jarring for anyone. So whenever I originally saw him, I was like, that's not Amit. But I think it'll just, that will become his look. Everything that I talk about, by the way, Star brings up a good point here, but everything that I talk about that I like about businesses, so, not allowing, like you don't want to be on the wrong side of government. You need an evangelical, sort of a religious founder. I think Toby Lutke is absolutely that person. So, yeah. Anyway, I'm going off on a tangent, but I don't remember what I was going to say. Sorry, I just think Shopify fits into everything that I like about a business. Growing, taking market share, evangelical founder. You can find these people that I think skate towards where the puck is going rather than where the puck is today. And Toby Lutke has been by far one of the best CEOs of all time to do that over the many years. And now people are calling for his demise. Good luck. Dude, Shop's PE is 86 plus. What the heck? I mean, they're a company that's one of one. I said this is the main concern about this business, but you're like, the only way I can put it is if you don't like the valuation, don't buy it. But like, I think that you pay to have a one of one business. A Cloudflare, CrowdStrike, a Tesla, there's a bunch of these businesses that are one of ones. They own the e-commerce market. I should say they own the decentralized e-commerce market. Everything that you wanted to see from this, quarter, we saw increased attach rates, better margins, large growth in market share gains this quarter. They're guiding for look at the difference in the e-commerce space PayPal is in the e-commerce space, and they can talk sometimes about, they're like, hey, you know what, like the consumer's stressed or something like this, and then they guide for essentially negative growth, meaning that they're dying. And then in that same breath, Shopify is guiding for 30+% growth, but they're playing in the same market. In every world, there's going to be winners and losers. PayPal is essentially losing to ShopPay. They're losing to Apple Pay. Very, very interesting. But sentiment that you can just rebuild Shopify might be around for another year. Are you adding to Shopify here? Guys, for real, I don't have money. I don't have cash. I'm fully invested. I still don't know if I would invest in them, just because there's such a large, like, I think anytime I talk positively about a business, people are like, okay, but your dollars mean more than your words, so why aren't you buying? Well, this company is like a massive percent. I've got more money in Shopify than I do SoFi. A little fluff passed by my camera. So, essentially, my large bet, my large allocation to Shopify is my, essentially buy rating on the company, that I still believe in it long term. If I thought that it was going to die, or that we're going to have massive margin compression, and that the company is going to, deserves a smaller and smaller premium on the stock, I would sell. But I also like Robinhood here, and SoFi, and D-Local, and all these other names. I own Mercado Libre. You're 100% invested? I mean, essentially, yeah. I have, like, for real, like a little bit of cash. But yeah, I've got a full equity position, baby. But, like, if people ask, like, hey, can you afford your bills, and do you have money in your checkings? It's like, yes, that's not what I'm really considering being fully invested. But, yeah. I can pay my taxes. I've got these sort of things. Then margin. I was talking with Stephen Fiorillo about margin this morning. I'm not going to do it, but yeah. Are you okay with taking more risks since you're younger? Yes. That's why I'm fully invested in all tech names and stuff like this. Do you think Adobe deserves to trade at a forward P ratio below 11 times? Maybe not. I don't know Adobe's products as well as I know the companies that I'm holding, and maybe Adobe's worth looking at. But what I really like doing is buying companies that are the one of one businesses, rather than buying growth at a reasonable price. I really like buying, like, a little bit of the blitzkrieg hyperscaler type names, rather than the what Adobe might fall under. Anytime that I've ever tried to do that, like PayPal or something like this, like, they've just not worked out. $30 down on PayPal, not selling on a loss. I don't care. I mean, maybe you should consider protecting that 70%. Adyen is a one of one. I do think Adyen's a one of one. I completely think Adyen's a one of one. Isn't it more risk to not be invested in AI? I mean, that's a potential. You could definitely believe in that, but I still think that that's a risk on prospect or like view. That's definitely very risk on. However, I do think that is a thing. Opportunity cost. I take L's all the time. Well, I think that's true. I think if you don't believe in PayPal and you think that like Nebius or something like that's the one that I keep going back to, is just going to continue to outperform that name, why even savor your position in PayPal? Now, if you think that now it's, even potentially a better opportunity, then great, like continue to hold. But if you've lost faith in the business, you don't believe in management, whatever management is right now, then I would trim. But see here, look, it doesn't mean that anything that's down 30% is worth trimming. That's also not that's not what I'm trying to say. There could be things that are down a ton that you still heavily believe in. But if you're saying, I'm going down with the ship, I've already lost so much, I'm not taking a loss, bro, you can lose a lot. Like you're down 30%. Okay. Find out what negative 80 feels like. What is ADYEY? It's a company called Adyen. They're a payments company. They deal with large enterprises, like how most of Amazon's payments are done. Dutch business, extremely, extremely exciting. They don't even have any competitors. All of Tanner's positions are down bad after earnings. Maybe I should sell Nebius before tomorrow. I mean, I think that those names have actually done okay as the cloud names. But yeah, I'm fully invested in tech, and tech is down, if that's what you're trying to say. Like, Shopify did unbelievably, and there will be times where, like 2022, I did not do better than the markets. And then the years where tech and all of these have done way, way better than, way better than the overall markets, I've greatly succeeded. And whenever you add in all of those years, the 2020s and the 2021s, 2022, which was terrible, 2023 was great, and 2024, 25 were great. I'm, doing amazing versus the S&P 500. So if 2026 is another one of those extreme red years where, I'm down 30% and the rest of the market is able to be green, up 5, up 10, something like this, then that's just not going to feel good. But I cannot help but to double down on my beliefs that have literally served me so well for the last 10 years. I'm not actually down 30% year to date. I'm just saying, like, if I'm to continue this path and we just keep freaking losing and losing and losing, like, if the next name to sell off is Nebius, and then after that, Nvidia sells off, and then that happens for multiple more quarters, like, it could be a bad time. I'm 45 and still want growth stocks like Tanner. That's the dream, honestly. That's where I hope I'll be as well. FICO fits your criteria, I reckon. I don't reckon. Shopify earnings were great they were great in everyone's opinion. No one had a bad thing to say about them. Show me the analyst report that's going, hey, you know what? That was actually pretty crap. They dominated. For real, I see a lot of people saying, like, names that I think have, like, I think retail can get in this trap where, like, names that have overly sold, HubSpot, PayPal, Adobe, stuff like this. Like, I don't think that there's a bottom for companies. Companies can go to zero. I would not invest in the mediocre. Well, okay, here. This is my opinion. So if you're coming from my opinion, this is my opinion. Doesn't mean that it's going to be, absolutely true or something like this. But what was I going to say? Sorry, what was I going to say? Oh, I just think that like buying the best companies that are down, they don't have. I don't think that searching on a screener and picking the names that are most down is an effective way to invest. Invest in the number ones, not the number twos. Completely agree. The number twos are the ones that are going to get innovated away. Completely agree. Yeah, invest in market share gainers. These are all the sort of rules that I adhere to 100%. Diversifying into other sectors helps. I mean, I'm not a big believer in diversified portfolios that much. Obviously, like what I think diversified portfolios are good. Like whenever I was a financial advisor, and you'd kind of give a risk assessment to a customer or to a client, and then you're taking a look at, okay, well, are we giving them more of a balanced portfolio, maybe 60-40 equities and fixed income and all of this stuff? And what I really think that those portfolios are designed to do is not get you fired as a financial advisor, or even if you were a portfolio manager or something like this. They're designed to essentially say, okay, well, you know what? The market's doing great and we're doing 80% of the way there. And then whenever the market's going down a ton, you're like, hey, you know what? The market's down 8%, but we're only down 4%. And honestly, all I think it does is diversifies you. You're hedging your convictions. I know where my convictions are at. The market doesn't see it that way. I don't care. And I'm going to take a rashy bunch of shit online from people who have different trading strategies and people who say, hey, you know what? You actually have to bet this way. But that works for them. But I don't think every trading strategy works for everyone. And if we were all sort of just, trying to capture the best sort of returns at any period, then we would go work for Renaissance Technologies and we'd all be quant traders, and that would be the only way to invest going forward. But because I like to sleep at night and I also enjoy what I do, I like long-term investing because it's by far the mix of, hey, I get to pick the greatest companies in the world. I get to listen to the most inspiring people in the world. The returns are usually outperforming the S&P 500. And that's the only reason why I'm looking to individually invest in equities versus just buying the S&P 500 is I aim to outperform the S&P. I don't want to diversify and pick a bunch of names that I think would help in a downturn. But then at the end, whenever things do return, I'm like, why am I holding on to tobacco names and companies with much higher PEs because people believe in a recession, they're still going to eat McDonald's and go to Costco? I don't like those companies. Not that I don't like the company. I don't like the stocks. It's not the way I want to invest. You guys go ahead. Jonathan Price taking by far the most needed victory lap on Vertiv. You're an absolute gent, brother. You picked a great one. Matt, dude, I saw your comment 1,000 times. I saw it like I'm fully aware. Fully aware. Bill Ackman buys Meta. Okay. Bill Ackman buys Meta. Guys, Bill Ackman buys Meta. It better be up 12%. He's saying it's running. Oh, okay, we're red. So chill, brother. Chill. And by the way, all these green candles are not Bill Ackman buying. This news is like hours and hours old. Okay. I bought 8,000 shares of Meta or at the beginning of the day. I think it's a great long-term hold, and it's why people like, Bill Ackman are seeing that. It's AI proof, essentially. He's been getting really into the Mag 7 names as well. He's been a big believer in Google and Amazon and Meta. So, yeah, it'll be great. I'm happy that he's involved. The first person that I think posted about that was Stock Market Nerd, I think, is whenever I saw that. Let me check whenever he posted that. 2 hours ago. Yeah. It was in their earnings presentation. New investment in Hertz, Amazon, and Meta. Okay. Did you all know that Bill Ackman bought Meta? Okay. Hey, did you cover Bill Ackman's recent purchase? Looks like he bought Meta, SoFi for the community port. Bubbles in the tub. Thank you, brother. Yeah, we actually did just cover Bill Ackman buying Meta. Thank you so much. Appreciate it. Can we move up Nvidia earnings to now? Yeah, I mean, I would like it. I still do worry that, like, just like we saw about Shopify, like the numbers could be great and then no one cares about, Nvidia for another quarter. It can definitely get worse than it is. Like even a PE of 7, like, well, I think that is too low for a name like Nvidia growing at 65% this quarter. We SharkNinja, this is crazy, dude. What is going on? Oh, wow. Okay. This stock was down after hours because their guide only guided for 10% growth next year, which was quite the change in pricing. Now up 7.6%. So quite the change in pricing from 107 to 128. And then Shop, like, down is up and up is down. Have you guys seen Stranger Things? We are living in the upside down right now. Let's go ahead and have a listen to SharkNinja CEO.
SharkNinja reporting fourth quarter results this morning. Revenue basically in line with Wall Street expectations at $2.1 billion. That's against an estimated 2.09 profit. So basically in line. Joining us now to talk more about that, consumer, and more is SharkNinja CEO Mark Barocas. Mark, thank you very much for joining us. There's a lot of stuff I want to get to, but the first thing I got to ask you about is right on your webpage, this cryo glow face mask thing. What is that?
Also, ladies in the chat, should I buy this for my girlfriend? Let me know. The name SharkNinja, I know it sounds a little crazy. It's two different brands. It's Shark and Ninja. You've probably seen their products in the cleaning and sort of cooking space as well. They make smaller appliances.
Yeah, so we introduced Shark Beauty into the skincare space about a year ago, and the response has been incredible. It's our first FDA-approved product. It's an LED infrared cryo face mask. During the holiday season, it was the #1 selling skincare device in the United States. We're expanding tremendously into skincare. It's an area of business that we think there's tremendous untapped opportunity for us globally.
It's creepy. Hi, Mark. I understand. We see these ads, we see these products everywhere now. How important has this category become now to a company we still might associate with vacuums and blenders?
Well, look, we entered into the beauty space 3 years ago, and our hair care business grew tremendously. And so we looked at other areas within beauty for us to be able to expand to. We looked very closely at what consumers were doing outside of the home that they weren't doing inside of the home. Today, you can find med spas in nearly every town around the country. It used to be 5 years ago, you'd have to be in New York or LA or Miami to find a med spa. And people are going for treatments, spending $200-300 on these treatments. And so we introduced the Cryo Glow as our first skincare device. We followed that up this holiday season with a product called the Shark Facial Pro Glow that extracts and moisturizes and depuffs your face. And both of those products have been tremendous drivers of growth for us, both in the last quarter and we think as we move forward into the next year.
I got to say, as somebody that owns multiple dogs, the Shark vacuum cleaner has been
The vacuum is amazing.
been used
I
a
have
lot
it
in our
too.
house. 'Cause when you got multiple dogs,
And when you
stuff
don't, when
gets
the
everywhere.
electric ones just won't cut it, I go back to the Shark. I know you have both.
There you
but
go.
The Shark
So,
Ninja is fabulous.
Mark, how do you see the consumer then? Because what you guys do is you sort of take existing products and you change them, make them better, make them unique. How do you see the consumer? We just had a discussion about jobs and rents, 50% of people's take-home pay.
Yeah, listen, the consumer is clearly under pressure. I mean, you heard about it in the last hour that you had there, but I think that that's where SharkNinja excels. I mean, we deliver market-leading performance, great quality products, as you just mentioned, at extraordinary value to the consumer. We're not the highest priced products in the market. We're not the lowest price. The opening price consumer is stepping up into Shark and Ninja, and we're also the brand of choice for premium consumers. In fact, you could buy a Ninja or Shark product for $59. You could buy one for $999. So we really look at, we want to sell affordable, accessible innovation. And I think actually that positions us really, really well in the environment that we're in today. I mean, we grew our sales nearly 18% in the fourth quarter, which is an extraordinary number. I mean, EBITDA, grew over 36% in the quarter. For the full year, which was a really challenging year, if you think back at tariffs going into effect in April, we grew the full year almost 16%. So the consumer's really, really responding to our high quality products and our extraordinary value.
Mark Barocas, CEO of SharkNinja. The stock's down right now about 8%. But again, it's kind of a sell first, ask questions later market. Mark, we really appreciate you coming on. Thank you very much.
I don't think you should be saying that the product is creepy whenever you're interviewing the guy. It's definitely creepy. I don't think anyone is questioning that. I think I'm going to have to buy her it, though. I saw it at Costco. Might go get it. Is that a good little gift? Let's see. Does Costco have it on their website? Scary face mask. It's going to scare all the dogs. He definitely knows it's creepy. Yeah. Yes for Tevis. Can I wear it when I go to the bank? I wonder what the ultimate human looks like, with a cryo glow face on, with the Meta glasses somehow on there as well. You're just wearing all the tech. Walk into a bank, they'd probably tase you. Okay. Only if she already likes skincare. She's a lady. Of course she likes skincare. More Vertiv for the community portfolio. You think even at these prices, eh? John's up 19%, and he says, buy more, brother. This is not done with. Thanks, John. Okay. Yeah, ride on one of the hoverboards as well. Buy more S-bet, LOL. Do buy? That was your bet, not mine. That might do okay as well. Ethereum has to come back. That's the thing. That's all based in Ethereum. Now both of those companies are practically almost fully staked now. So they actually are making enough money to pay for any sort of expense or anything. So they are slowly building their book value. But the real risk is more opportunity cost. Okay. I like a more natural way. What, instead of red light therapy? There was so we talked about Shopify. There was a couple other things that I wanted to highlight because obviously, there's a lot of talk about rate cuts right now. Jobs report came in better than expected. Non-farm payrolls. Let's go ahead and have a listen to that. You guys can hear the numbers and what potentially we saw. It's only 3 minutes, and then we could talk about what this potentially means for SoFi.
Hi, good morning, Kelly. Yes, it's Jobs Wednesday. Not necessarily a Friday, but every bit as important. Non-farm payrolls for January coming in twice expectations at 130,000. 130K. That would be the juiciest going back to April of last year when it was 158. Now, if we look at a couple of months worth of revision, they came in at minus 17,000. Now, let's look for average hourly earnings month over month, up 0.4. That's 1/10 higher than both looking back and looking forward. 0.4 would equal October last year. You are all the way back to the summer of 24 to find a higher month over month earnings number. Let's go year over year. 3.7 exactly as expected. 1/10 light to 3.8 in the rear view mirror. So how does that stack up? 3.7 would be the lightest since it was actually 3.6 Thanksgiving of last year. Now let's look at hours worked, shall we? 34.3. That increase, that's a good thing. That's up 1/10 from both what we were expecting and our last look. 34.3 would equal November. To find a higher one, you're all the way back to March of 24. Now the unemployment rate may be the most important number of all, and it moves down 1/10, 4.3%. All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More good news, 62.5. That would be the best since it was 62.6 in April of last year. And drumroll, please, the final number I'm going to give you is U6, the underemployment rate, and it comes in at 8%. 8%. Last look was 8.4. 8% would be the best going all the way back to July when it was 7.9. Now, for the bad news, but expected bad news, we're looking at benchmark revisions from April of 24 to March of 25. The original number that we were looking at was around minus 900,000, comes in at minus 862,000. So the benchmark revisions are a little less than expected, but some were actually thinking it'll be in the 700,000 camp. So that comes into minus 862. What are yields doing? Zoom, zoom, zoom is what yields are doing. We moved from 4.12, which was down 3 on a 10-year, to 4.19. That makes sense. A 2-year really screaming from 3.45 all the way up to 3.53. Why? Because these are solid data points. And one more thing I'd like to point out, I am really on this kick. I think seasonal adjustments are dead on arrival on most numbers. Yesterday's retail sales looked flat. I brought it out at 8:30. But if you look at non-seasonally adjusted, it was the strongest December on record at $818 billion. Kelly, Sully, back to you.
Honestly, I know people were making fun of the hype. I love it. Maybe it's a little bit, a little zoom. Maybe a little bit frustrating because, what we're actually seeing is that stocks are not really reacting to this good news because, bad news is good news is bad because it's going to lead to more rate cuts. And maybe this is saying that we don't need as many rate cuts. That's why potentially some of those bond yields are actually raising, is that maybe, the cuts aren't actually going to come. Citigroup actually revised their, rate cut forecast to April, which was previously in May. The chance of a rate cut in May now sits at roughly 7%, with about a 93% chance of no rate cut here in March, which is the next meeting. So, yeah. Then, legendary investor David Einhorn says that the Fed will cut rates regardless. And in fact, not only will they cut rates they are going to substantially cut more rates this year than 2. Let's have a listen.
Overall market, too much for you. You said in your last letter that you haven't seen a market this expensive since.
Yeah, well, I think this is the most expensive market we've been in. I think that most investors aren't paying any attention to valuation. Maybe they care about the next data point. Maybe they have a view about price, but nobody has a real view about value. I think a lot of the people who professionally invest money and used to think about value have been fired, been redeemed. They've been turned into index funds or replaced by like pod shops, which they don't know what anything is worth, but they know what the next piece of news is going to be, and they kind of want to invest ahead of that. And so like the valuation discipline that the market used to have, it's kind of gone. Like those people have been fired, and I don't really think they're coming back. And so we have a market that is kind of disconnected from sort of traditional valuation measures. When you look at it like market cap to compare to the economy size or compared to profits and stuff like that, these are just at record levels, which doesn't mean you have to be bearish or you should sell all your stocks. It just means that from my perspective, from a long-term point of view, this probably isn't the greatest time to have a ton of equity exposure.
I mean, the pushback on that, which I know you hear about all the time, is that the economic setup is pretty good. Fed policy has been easy. They've been cutting rates, and they might cut further this year. You know, margins are high and could go higher because of all these productivity gains with AI. I mean, those are all the reasons why we're looking at higher multiples.
And I wouldn't argue at any of that. And all of that may be true, and all of those things could come to be. In fact, I actually think the Fed is going to cut rates a lot more than what's priced into the market. Oh, yes.
How many times?
A whole bunch of times.
A whole bunch of times? Market's like maybe
the market's pricing into it's going to. I think it's going to be a lot more. You know, President Trump believes that the U.S. should have the lowest interest rate in the world because he thinks we're the best credit. And he's been mad at the Fed chair since he took office, screaming at him to lower rates. So he's picked his new guy. And his new guy is going to come in and he's going to lower the rates.
He has to convince the rest of the committee to.
I know that's the story on Wall Street, right? Which is, oh, there's 12 people. They have to be convinced. The thing is, has the Fed chair ever been a dissenting vote in his own decision? Like, I don't think that's ever happened before. And I think that Kevin Warsh, who I've met and I think is very articulate, he's going to come up with arguments that are going to persuade people. He's going to say, if the economy is running hot, like say the jobs report this morning, that's not a reason not to cut. The only thing that's going to make
market's telling us it's a reason not to cut.
Yeah, I think the market's wrong today. I think one of the best trades out there right now is betting on more cuts this year than expected.
Which you did last year successfully too.
Yeah, we've had this on for a bit, but I really think that you know, he's not being brought on to hold the rates at a steady rate. If we have 4 or 5% inflation, sure, then he won't be able to persuade people. But otherwise, he's going to argue productivity. He's going to argue we don't have to cut just because the economy is running hot. I mean, we can cut even if the economy is running hot. And so I think by the time we get to the end of the year, it's going to be substantially more than 2 cuts.
Substantially more than 2 cuts.
Yes.
So that would be good for the equity market, wouldn't it?
It very well could be.
But you're not betting on the equity market.
Well, the way I'm playing it is by betting on more cuts. So I own a lot of SOFR
interest rate futures.
Yes.
You've also owned a lot of gold, which has been a very successful trade. I mean, do you have as much conviction in gold right now at 5,100 an ounce as you have previously?
Well, gold's been very interesting. It's gone up a lot over the last couple of years, and not for a reason that I would have foreseen when we started investing in gold, 15 years ago or something like that. What's happened right now is the Chinese have decided that they want to sort of compete on a currency basis. The central banks around the world are buying gold. Gold is becoming the reserve asset as opposed to treasuries, or it's kind of almost even at this point, whereas a few years ago it was mostly treasuries. I think that U.S. trade policy is very unstable, and it's causing other countries to say, we want to settle our trade in something other than U.S. dollars. And so I think that is what has been driving the cause for gold. Our thesis on gold over the longer term has been that our fiscal policy and our monetary policies don't make any sense. We're running almost a 5-6% deficit to GDP here with nearly full employment. On a cyclical basis, that's some kind of a record or very near a record, and certainly isn't sustainable. And if you look at the other major developed currencies in the world, they're as bad or worse than the United States. I mean, Japan is well over a couple 100% deficit to GDP, and they've gotten away with it a long time by paying themselves no interest, but now they have to pay themselves some interest. And so I think there are some issues that sometime over the next number of years could play out with some of the major currencies, and that's the core reason to own gold. And I don't even think that is at all the explanation for why gold has been going up now. I think that hasn't even played.
Yeah, I mean, in terms of some of the comments about how expensive the market is, I saw some comments in chat saying like it doesn't look that expensive. I mean, there's definitely data points to believe that it is expensive. You could look at the Shiller PE, for example. We can look at the general S&P 500 PE as well, but like the Shiller PE has been kind of going off, saying that we're at some pretty historical high rates right here, 40 times on a Shiller PE. If we look at the general S&P 500 PE right now, 29.8 times. A lot of this is actually being helped out by, big tech is actually really cheap, which is so funny. I mean, Nvidia is expensive on a trailing 12-month basis, but you can look at where's a price to sales ratio or something like this, or a lot of what this has to do with is better margins, charging more and more software. A lot of that has actually changed. But generally PE, the reason why a lot of people use it is just this is getting down to, okay, well, what's the price that actual earnings after operating expenses, after cutting a cost of goods, and then what are we paying for on a multiple of some of the best American companies in the world? It's definitely up there. Now, if earnings growth continues, that slashes those rates pretty quickly. And then you can go ahead and look at, specific names like Walmart is much higher than a 29 time. What's Walmart's here? Walmart. Let's play around on Fiscal AI really quickly. By the way, did you guys see the tweet that I put out? Here, one sec. I just thought about this. I just want to give Fiscal AI their flowers. And let me... Whew. Okay. Fiscal AI somehow, whenever I was on the Robinhood earnings call yesterday, not only put my name in there, which unfortunately Amit and Roy weren't able to make it. They spelled Amit's name A-H-M-E-T, and then they called him an unknown investor. But, they actually found, somehow they said Tanner from Future Investing, and then they literally called me Tanner Manson as being the person who's talking. That's AI, right? Like AI was like searched up, okay, who is Tanner from Future Investing? It looks to be this Tanner Manson guy. He's on X, and then put my name in it, I guess. So that's kind of cool. Crossroads was not as lucky. Unknown investor, sad. We got to get them updated. But yeah, Fiscal AI retweeted me because of that. Somehow. It's your product, dude. I don't know. It is a Gemini backend. I am aware of that. A lot of the data that they end up pulling is through Gemini, which is quite interesting. Sorry, what were you guys all? Oh my. Woo! Sorry. Okay, let's go back to Fiscal AI. And I was going to look at their ratios really quick. So trailing valuation, let's take off this really quick and look for PE. So yeah, they're pretty historically high right now at a 45 times PE, but even looking at like, let's say the last 2 or so years, 2-3 years, what we can do is also take, say the median line here at 37 times. Where's the average line? Okay, that's what I was also looking for. 35 times. 35 times on an average PE that Walmart has been trading at, much higher than the overall S&P 500 as well. Why is this not showing in terms of a chart? Can I? Not sure. Anyway, Costco also trading at a very high rate, roughly 51.8 times PE basis or PE ratio. Like these are really, really freaking expensive names that are considered defensives, safe. They're expensive as ever. You know, even at the lowest that Costco has traded at is, oh wait, sorry, it just updated. Costco is currently trading at 49.4 times. Still high. And yeah, I mean, there's names as well. Tesla, Palantir, they hold them up. But you know what's not holding them up? Meta, Microsoft. Like these are cheaper than the S&P. What website is that? Fiscal AI. It's a paid-for product, but it's not too bad. I think their annual subscription in US dollars something like $480 for the full year. They're actually a full partner of the channel. So if you go to like futureinvesting.pro and you end up wanting to see the daily live streams that we do from noon to 1, you also get Fiscal AI included. And then every year after that, it's 50% off. So boom, I've got a really good freaking connection with Fiscal AI. And the reason why is that they have the best product in the market. I mean, there's Bloomberg and then there's Fiscal AI. And the price difference is essentially $24,000 a year. Okay. So seamless. I know, it's such a great plug. It's true though. I do get a lot of DMs asking me what, like I'll be on Amit's stream or whatever, and then I get a bunch of DMs like, hey, what was that service that you're using? And I say specifically that it was Fiscal AI. But save yourself money. Go through me. Okay, Vlad Tenev ended up speaking on earnings yesterday. Let's go ahead and have a listen to this. Maybe this will decide whether or not we want to buy the dip.
Shares under some pressure after mixed results, weighed down by weak crypto revenue and what's been obviously a tumultuous year for Bitcoin. Joining us this morning, first on CNBC, is Robinhood CEO Vlad Tenev, who's in San Francisco with our Kate Rooney. Hey, Kate.
Hey, Carl. Good morning. And Vlad, it's great to see you. Thanks for being here in person.
Always a pleasure.
So Carl mentioned it, mixed quarter. Crypto got so much of the attention. You guys had some numbers about sort of the current quarter, down about 57%. You noted crypto is only about 20% of revenue, yet the stock has been so tied to sentiment around Bitcoin in particular. How do you plan on sort of managing through that? If it is a long-term bear market, how are you positioned there? And then just fighting the market perception that Robinhood really is right now lumped in with crypto.
I think perception lags reality to some degree. We now have 11 businesses that are generating 100 million or more in annual revenue, and that's up dramatically in just the past couple of years. So we're going to continue to diversify. We're also, in the long run, very bullish on the crypto industry and have relatively quickly become a leader there. Just after the earnings call last night, we announced the launch of Robinhood Chain Testnet, which is our layer 2 chain, the best chain for trading of real world assets. And so what I talked about at the earnings call is really forward looking. What's our vision for 2026? How are we going to execute? Crypto is a big part of it, but it's really about driving forward tokenization and making sure that crypto technology blends with assets that have real fundamental utility, like tokenized stocks and other things. When
you talked about moving it forward, there's been so much focus on prediction markets too. That has just been major focus for Wall Street. You talked about it, some of the growth there, even in this current quarter. Given that the NFL season is over, where do you see the growth there? Does that maybe put a kind of a damper on volumes? And what is sort of the next leg of prediction markets, if not sports?
I think the interesting thing about prediction markets is it's more than just sports. So a lot of people have been saying, well, if you look at the sports books, typically after the Super Bowl activity goes down. But what we saw is the week after the NFL season ended, there was a lot of interest in the government shutdown contract. And that contract actually got more volume than many individual sporting events. And so as we continue to diversify and as we put these contracts contextually where customers expect to see them, like in stock detail pages, where if you're looking at, Tesla or Apple or other stocks, you see relevant prediction markets. I think that you'll see the percentage of non-sports increasing over time.
We heard some estimates from analysts, 8% of revenue, 9% of revenue for Robinhood. So obviously a growth area. How are you thinking about the risk here? There's been talk about potential market manipulation. If there's event contracts on everything, including what you're going to say on an earnings call, how do you think about the guardrails and the potential risk for insider trading?
Yeah, it's something we spend a lot of time thinking about. And I think that obviously we have experience monitoring and surveilling this with our traditional business because insider trading is not a new concern. It's been real in equities markets for decades, if not more. And I think this is an even stronger argument to making sure that this industry is onshore in the US, because if you're offshore, unregulated, and using products that don't actually verify identities, all bets are off. So I think that's why it's important for us as a regulated player. We KYC all of our customers. We know who's trading, and that gives us the ability to really ensure market integrity.
Okay, market integrity. What if Nvidia misses? I mean, like, what if Jensen's plane goes down? Like, what are we doing here? They won't miss. Yeah, it's going to look ugly, but they're going to grow and they're going to do extremely well. I think what you need to do in order to look at whether or not they're going to miss is look at CapEx growth across every single of the, Mag 7 names. Look at the chips delivered from TSM in January. Look at the, every single data point is Nvidia is not missing. So you can play the what if game all day long. You'll never make an investment. Scared money don't make money. Okay? But also do your due diligence. Somewhere in the middle. Okay. Rubin's probably going to be announced to get shipped earlier too to try to save the market. I don't think that's not going to make a difference. I think Nvidia is going to do what's best for their business, not for what's best for the market. Tanner, tell me about Palantir after earnings. Good earnings. Expensive, just like they make Shopify look cheap. Tanner, stocks are red. Yeah, my bad. Let's go ahead and bring up some stocks. So Nvidia, Nebius tomorrow morning, I'll be live covering this stock. It's currently red, which sucks. Jensen is so much into ServiceNow. What do you mean? Jensen is so much into ServiceNow. Can we talk Upstart? I talked Upstart in my my pro member only live stream earlier, but I'll just summarize essentially what I said. David Gerard, I think, being ousted is a real sign of what's happening at the business. I'm a big believer that Paul Gu, the new person that ended up getting promoted to CEO, is like an actual genius. Like, I mean, full bore, one of the smartest people on earth. The problem is that he should not be CEO. And I continue to think that they are placing Paul Gu in the wrong job positions that he is not best equipped to do. He should be at a computer and coding, because they were ahead by a long shot, Upstart was, in creating models well before this sort of ChatGPT moment. And I think like I'm not a super fan of Upstart because one, I think they're fully focused on the tech, less focused about actually, being a bank and in capital markets, and banks don't care to trust Upstart. They have nothing to gain and they have everything to lose. And so this is why you're seeing like a company like SoFi doing so well, is that they're sort of a bank, capital markets first, and then we'll usher in some of the tech to help with the underwriting. So I'm a very, very big fan of SoFi and think that they will honestly eat Upstart's lunch. I mean, they already have. They're already originating more in their loan platform business than Upstart. So that part's already secured. I have no reason to believe that Upstart's going to deserve a premium into the future. Tanner, I bought a Bowflex on Amazon. How long until I look like you? What do you mean you bought a Bowflex? Do you mean like you got Bowflex dumbbells, or you mean like you bought a thing where the bars bend, like the rods bend rather than actually lifting weights? Is that what you're talking about? Because I'm so serious, return it. If that's what you got and it has anything to do with the Bowflex rods, it's time to return it. Tanner, they're saying there's a restoring fee. Bending rods, no free weights, for real, return it. You're going to hate it. It's the worst product in all of existence. And I so apologize to say that. But what you really need is, and it doesn't mean that it has to be free weights. It can be in a rack system. You can have something that lifts weights and then puts it back down, but then you're having the same resistance all the way through. So what you'll realize with the bending rods thing is like you're going to see different resistance at every point of your exercise. Your muscles aren't like you're not going to build anything to, with that sort of thing. No bueno. $1,200 of junk. Well, essentially, yeah. The reason why it's so cheap and $1,200 is maybe you could be like, hey, that seems expensive. What you want is like a functional trainer system, like Rep, Rogue, something like this, where you can either get. I mean, there's a couple different ways to do it. You can either get like a squat rack or something like this, where you can put a bench in and use an Olympic bar with real weights. If you're worried about injuring yourself, get something that the, weight will stay on the bar, like it'll lift weights for you, or like a Smith machine where the bar stays on a rack so then you don't hurt yourself. But for real, those Bowflex bending bar things is how they for real trick you. And the easiest way to know is the resale price of gym equipment will immediately tell you whether or not the machine is good. Okay. So if you see something that's online for $5,000 and then you try to buy it used and it's $4,000, that's a good machine. Okay. If you buy something for $1,200 and then you look at the resale on like Facebook Marketplace and people are literally trying to get you to pick it up for free or for $100, that thing is absolute trash. It's worth more to move than it is to purchase. I thought this was a finance channel. This is my channel. It's whatever the heck I want it to be. Right then and there, I wanted to talk about that Bowflex thing, and that's what I talked about. There's really three main things that I focus on in life. That's wealth, obviously, and I love stocks. But I also like health and relationships. Health, wealth, and relationships, very, very important. So I care about and we'll talk a lot about my girlfriend, potentially my family and kids whenever I have those too. And that's a big part of my, that's going to be a big part of my life as well. And then, I talk about my Whoop and running and my sleep score. That's very important. And then I also care about how much money I have. I talk about saunaing a lot. Yeah, I love my sauna. Future investing, you just meant it to be investing in my bank account. What I meant is just a long-term focus on, delayed gratification. Okay. Let's go ahead and see Shopify. Are we coming back potentially? -9 looks a lot better than -13. What's the best at-home sauna? Well, that's one that, like, there's not really a name brand that I would give you guys. Like, honestly, a lot of people build their own saunas. It's pretty easy to do. Let's hopefully, fingers crossed, Shopify comes back. All right? We're hoping. Let's see what else is not working. Centrus Energy down 20, nearly 21%. Arista Labs down 20. Lyft down 15. Upstart down 14.5. Dude, Upstart's a $3 billion company. Robinhood down 10. Maybe a little bit of coming back, but still, we're down 10. So, like, that's about as bad as it got in pre-markets. But the fact that this was under $75 is crazy. Unreal. Carvana down 9. Wow. Don't they have earnings? Not tonight, but like tomorrow or something? No. Next week, maybe. Carvana is Wednesday the 18th. They have earnings. Wow, why are they just taking a crap? Or is everyone just like, we're just selling off every indiscriminate piece of tech? Chime down another 8.5% to $20.80. Like, this is just, crazy, this name, how sold off Chime is. What's funny is it's not even as bad as it's just randomly selling off after it went public down to $16.18 for no reason. We still haven't seen their earnings. When is their earnings, actually? Have we seen their earnings? Did it just pass me by? Someone would have told me. Q4 is in 14 days. Okay, cool. So we have Chime earnings. I have that name as well. We're only going to hold it for about 2 more quarters. So I want to see Q4 and I want to see Q1, and then I'm out. Have you tried those sauna blankets? No, I don't know what you're talking about. I actually sold my Nvidia. Gunslinger, let me guess. Tell me what you bought with that money. Let me know. It's going to scare me, isn't it? Lena said, why am I not a mod, Tanner? I'll mod you. But you know what? If someone asks to be modded, we're going to have to go through all your messages publicly. Just to make sure. Okay. Let's see what you've said in the past. Nebius, Tanner, Nebius earnings, Tanner, Nebius. Okay. Nebius, I need Nebius to fall. Hey guys, Nebius. Nebius is at 67. Nebius, chat's hilarious. Nobody's asking about Google. Zeta. Okay. Little spam. You know what? It's cute. We'll we'll mod you. That's funny. No, we like Nebius fans in the chat. There's definitely a mustache comment in there. Maybe. I like not being a mod in here. Ray, why aren't you a mod? No, Ray, you have to get modded too. Too bad. You can talk crap. I see Parsifal and I disagree from time to time. I don't mind disagreeing with mods. As long as you guys know that I still love you, you know? Stacking cash for more dips is what Gunslinger said he sold Nvidia for. Wow. Wow, wow, wow. That's the one name I wouldn't sell to raise cash. I'd almost like, there's been parts of me where I've sort of thought like, okay, I'm going to sell every name that doesn't have to do with artificial intelligence. I'm just going to go full bore into artificial intelligence. So like the last name I'd want to sell is Nvidia. However, if it, continues to climb, then I'll have to. I for real would sell Hood at this price over Nvidia. What's Nvidia at right now? Up 1.8, 191. Not high enough. Give me bigger numbers. Okay? Okay, new from Cash App, peer-to-peer payment links. Starting today, all eligible Cash App customers can generate a shareable Cash App payment request link. It'll be shareable anywhere from text, email, social media, and messaging apps. Reusable. The same link can be used to request money from multiple recipients or for recurring costs. Bro, that's pretty cool. SoFi needs that. SoFi, get on it. That's awesome. Okay, so after the after the market closes, we have a couple earnings today. We have Cisco, McDonald's, Grab, Amit's favorite Grab, AppLovin, HubSpot. Yeah, there's a couple other ones. I mean, there's a lot of names, but like in terms of the ones that I'm going to care about at all, I don't really care about Manulife or Paycom, QuantumScape. I don't really care about any of those. Viking Therapeutics. Don't really care. But McDonald's, Cisco, HubSpot, Grab, AppLovin. If I do go live for that, curious if you guys would want to listen to AppLovin's call. That would probably be the one that I'd be focused on. If you're interested in that. If not, we'll see. I expect an A- quarter from Grab. William, that is the benchmark. It's A- or nothing. Okay. Heck yeah on Grab. Yes, please. All right. Nvidia's a boomer stock? Maybe. Think to yourself, why is Nvidia's PE so low? Because everyone's wrong and I'm right. That's why. No, I think it's hard. I think there's many skeptical investors. I think that the market's an extremely complex one. I think that that's hard for people to know. Anytime that you see an article that someone says that they're trying to reduce reliance or a new product's coming out, the market freaks out because they don't fully understand the product. I think it's hard to push valuations above $5-6 trillion. Just like these are high prices to pay for businesses, regardless of earnings. So we're in a little bit of a new era, right? It's hard to swallow those types of valuations. And plus, people act like whenever a market does not see what they're seeing, that they're like, oh, well, ask yourself, why don't they see what you're seeing? It's like, okay, I could ask myself that at SoFi at $4. Does that mean that the market was right whenever I held it from 4 to 7 to 7 to 25, back down to 20? Like anytime that a market doesn't see what I'm seeing doesn't mean that I'm wrong. That's what alpha is. That's where I see my opportunity. Yeah, B, I completely agree with you. People don't trust the forward growth, and so it's a show me situation. But I'm that's why I'm not dying to have this all happen in a single quarter. We're just going to have to take it quarter by quarter, but I'm ready to do that. Check my messages. No. What are your thoughts on Grab? I think the real answer is I don't have many. Yeah. I don't really have many. Oh man, I've been listening to that CZ podcast with Chamath. It's really good. I want to continue to listen to it. I love hearing about the life stories of some of these like exceptional people. Yeah, if they continuously execute, the share price will eventually catch up. Yep. Hypothetically, what upside price would you exit? I don't really do that. The thesis would have to change. I'd need to see like growth slowing, or for the I don't know what the upside is. Jensen has told me that CapEx is going to get to $1 trillion per year. I'll readdress whenever we get there. Okay. Why would everyone have 6 apps and look at all of them? It's only going to go through Uber. Is that a comment on Grab? Because I think they are in different geographies, but yeah, I think Uber, if I'm not mistaken, has a stake in Grab. I don't think that they're competing directly, but if you're meaning like versus Tesla or Waymo or something like that, I do agree with you. No, versus autonomous. Yeah, I agree. I think Uber and even Grab, to that extent, like autonomous vehicles, will just end up going through the unified platforms. Okay. Maybe we all just relax and know that this is the flow for now. Yeah. Oh, Grab's later, 7:45. Oh, so you can almost do both, eh? Gamer graphics card manufacturers changing the world, says MJ. I want to see MJ's comments on his what he said on the channel over time. Okay. Not as bad as I thought. Okay. I was getting worried there for a second. I don't think I'm going to do Grab. I don't want to follow the name. Finally, my small portfolio just passed 30K, small steps. Matthew, that's awesome. Congratulations. We're in a long-term game, and I don't know if there's... What I really like about Bitcoin and the Bitcoin community is that they just sort of have this saying where they just say, keep stacking sats, which are the, fractional bit of a Bitcoin is a Satoshi or sat. That's the game that we're in, and maybe you don't like Bitcoin, but maybe you like a SoFi or a Hood or a Nvidia, or maybe even in Costco. Don't let me sway you, but just keep adding shares whenever you get that, that ability. And as it compounds over time, this is a very long-term game. So yeah, congrats, brother. Why doesn't Charlie Munger doesn't like Bitcoin? I don't know. He's too old. He said that he made a bunch of these weird comments where he's like, I know they say there's a cap on 21 million, but I promise you it'll change afterwards. I'm like, well, it won't change. So. Nebius earnings is tomorrow morning. Or, I mean, maybe it's today for you, for if you're, you know, somewhere else in the world. But for me, it's tomorrow morning. Bro's too old to be alive. Chill. I mean, he is the late Charlie Munger, the late great Charlie Munger. And although I don't agree with him on his beliefs on like Bitcoin or cryptocurrency or something like that, it's like, you know, the 99.5% of everything else that he said was amazing. I'm in the US, so same time. Okay, well, then you're just wrong. Nebius is tomorrow morning. Have we figured out who Satoshi is? I think I figured out who Satoshi is. I think his name is Hal Finney. Is the first person that Satoshi ever sent a Bitcoin to. And then Satoshi used to send a bunch of blogs and everything. Or he used to post a lot of blogs. Those mysteriously stopped being posted, and his account went completely dormant after Hal Finney became sick and then eventually passed away. So somehow the second in command, Hal Finney, everything ceased to exist after he was gone. So my number one suspect is Hal Finney. Or it's a CIA, PSYOP. I don't know. We should create a prediction market that never ends. And we can all just pour our money into who Satoshi is to never find an answer. Unless Satoshi wants you to believe that. Yeah, I mean, yeah. Did that guy find his hard drive of Bitcoin he accidentally dumped in the trash? No, I don't think it was ever found. Yeah, he spent like a ton of money buying up the certain plots of the dump that would have been where it was dumped at that time. But no, I don't think he's ever found it. Or maybe you tell someone. I mean, the truth is maybe you don't ever tell anyone if you did find it. Why would you? It's like telling everyone that you won the lottery. Be like, no, I lost it. I'm going to go search for it. I didn't find anything. I'm going to Mexico. I'm getting out of here. I'll see you guys later. I don't remember what the amount was on the hard drive, but I think it was like over 100 million, 200 million, something like that. Okay. Last time I heard, he was presenting to a group of investors to buy the dump. That's very funny. Okay. He could find it, but forgot the password. Yeah. It is crazy, though. Imagine that just like sometimes I think about that, like old trades. There was times where I had Nvidia and then trimmed it on the way up. I stopped trimming, but sort of in between it running up a ton and COVID and then me, not really seeing the AI vision as well as Jensen did. There was definitely trimming to be had, or else Nvidia would make up for, a much, much larger stake in my overall position. We wouldn't be at 48%, we'd be at 99% or something like this. And so what was I saying there, though? Yeah, you can always beat yourself up on like, oh man, I should have held this longer. I should have done this. I should have, bet on this company or something like this. I couldn't imagine that being the difference of like, instead of you having X, it would have been, 10 figures higher. Like, that would eat away at me. The difference of my portfolio being like I don't know what it would be for all the mistakes I've made of like, trimming Tesla too much or trimming Nvidia too much or doing all these or just playing around a little bit too much. My portfolio maybe optimally is triple where it is today. That I can sit with because it's still like my lifestyle wouldn't change. But there's a certain number where you're like, okay. My average on Nvidia is quite different now than what it was before. Before it was around like $5, $5.80, something like that. Now it's in the 20s because I ended up rotating my Tesla position, which was my number 2 position, into Nvidia at much higher prices. Real question, other than taking profits, why trim winners? I think that is a real question. That's a question for me too. I think even certain winners aren't winners forever. BlackBerry at some point was a winner. Motorola. Like, I think people always worry that like, okay, well, of course Jensen's done well, but that doesn't guarantee that they're going to do well for the next 10 years or something like this. Like technology and leaders change. But that would really be like, it's weird saying trimming winners. I don't think there is a reason to, but are winners going to be winners forever? Does that dynamic change? Does a thesis change? Does a competitor come in and change the way you look at a business? Opportunity cost when winners mature? Yes, but I think it also brings stability as well. Yeah, if a winner becomes too big of your portfolio, then that's true as well. I don't want to hold one stock that's more than 50%. Hood at 150 would have been a good trim. Well, I was calling for that. Like, I was like, dude, this is way too extended at 150. Like, I think we've lost our heads a little bit. And this was all live. And I remember calling Amit. Also, it would be so hard for me to find that live stream. This is another reason why I'm like excited for artificial intelligence, is I want to just be able to have like a channel-based AI and just be like, when did I say that? Because I did say it, and I want to remember where that is so I could just like bring up the clip. And that's where AI is headed. I like for real, AI, please bring up that clip where I said, X, Y, and Z. Bop, it was from episode, 200, whatever. Excited for that day. Not excited for how that's going to bite me in the ass and be like, hey, here's where he said buy skills. So, it's going to go both ways, but at least, transparency is like, I'm going to get what I deserve. But in terms of that, I called Amit and brought him onto the show, and he was like, bro, no, like, this is a generational business. I was like, yes, you're so true. Like, that you are right. And yeah, just looking at isn't Hal Finney crypto obsessed? What? But yeah, I probably should have trimmed, but also I completely agree with him that this is like we shouldn't just be trying to like, top tick stocks, and that we should just be holding them long term. So I don't even regret it. It's just, it would have been a cool moment where like we really did top tick it, and it would have been like a little bit more of a viral moment. But in terms of like the thesis for how I invest, I'm actually glad I didn't make a move on it. Okay. Where were all those days when Nvidia was so low to recommend it to us? Well, I wasn't making content back then, but even in like 2022, I was calling for Nvidia to be at $10 trillion. There's a live stream that you can go back and watch with me and Steve where I told him this is going to be one of the biggest companies in the world, and he didn't believe me. You could have trimmed SoFi at 30 and rebought at 20. Bro, Like, no. Do you know that you could have, when Shopify was up 13%, you could have sold at the exact top, and then as it came down later on in the day, you could have bought at 109. You know how much money you would have made if you bought up here, or sorry, sold up here and bought down here? Bro, you guys are the biggest, like, look yourselves in the mirror. Hindsight's 2020. Of course that could have happened. You didn't know. Yeah, just time the market. All right. I literally feel like I'm talking to my girlfriend right now, where she's like, well, why didn't you sell when it was higher? You guys are representing my girlfriend. Like, we're supposed to be having a market conversation right now, and you're nagging me. That's what I feel like. She's going to end up watching this. I love you, baby. I love you. I didn't hear anything back. Just be better. Yeah. Yeah. Yeah, Tom Lee tried timing the markets. Like, what are we talking about? My stuff's going to be in the front yard. Okay. Ladies and gentlemen, that's it from me. Yeah. That's it. What now? I'll see you guys later. If you guys haven't subscribed, please consider doing so. We're live every single weekday. I'm also trying to put out daily-ish videos. Maybe I should just say they're going to be every other day, because I can't seem to get out a video every day. And then maybe check out the App 11 video. I know I should go live for App 11. I honestly just don't even really care, and I kind of am getting this feeling that I just want to like sit down and read the report and not have to actually talk over it. Is that bad? I know that's bad. Okay. Thank you all so much for watching. Really do appreciate your time. But bye for now.